No, we took a hit. We were at 20, and then it grew up to 23%. Then it went down to 16% of the portfolio. I mean, it was really volatile. But I've always said, you're going to get this volatility in an ASN industry that's not regulated because there's no institutional bid. So probably at the low, we were at 15%. We lost, 40% of the value. And now we've come back up on some projects, and they haven't all come back at the same pace. The big players, the big market cap names like Bitcoin, like Ethereum, like Solana, like Polygon, HBAR, in some cases we doubled down. We took advantage of the extreme volatility in the large cap names like ETH and like Bitcoin. Why not add to the position if you're going to stay long? But, everybody trying to manage this space, I don't care who you are, if you tell me you made money in the last 90 days, I know you're lying. You've lost money and you're just averaging down, hoping for this to climb back up. If you'd own these positions for more than 2 years, you're basically in a break-even situation. So this asset class is not correlated with anything, as people thought. It's not correlated with inflation yet, but the real problem, and every time you and I talk about this, it's really a gauge on where the institutional buyer is. And right now, zero. They have no Bitcoin. Anybody that tells you the institutions or sovereigns own it is full of poo-poo.
Did you hear Kevin O'Leary just now? He merely stated that no institution holds Bitcoin and that anyone who claims otherwise is dishonest. We tend to believe him because Tesla recently sold some of its Bitcoin and because several significant Bitcoin corporations recently declared bankruptcy and the remaining ones are about to follow suit. He also stated that institutions want cryptocurrency, particularly Bitcoin, but they have not yet purchased it. When will they do so? Make sure to watch this video through to the end if you want to learn more about this and grasp all that Kevin said. Now, without any further delay, let's begin with a few things you need to know about Bitcoin in order to understand what Kevin means. If you have been watching our videos, you must know that we mentioned recently that BlackRock and Coinbase have partnered. In response to this partnership, a well-known cryptocurrency analyst is explaining how this could cause the price of Bitcoin to skyrocket to $773,000. The largest asset manager in the world, BlackRock, and US-based cryptocurrency giant Coinbase announced a partnership last week to make cryptocurrency trading available to affluent clients. The host of Invest Answers claims that in a recent strategy session that the partnership could at the very least increase Bitcoin's market cap by $1 trillion. He specifically stated that the market cap would increase by $1.05 trillion if BlackRock invested 0.5% of their assets under management in Bitcoin using the multiplier of 21 times. This will eventually increase the price of Bitcoin by about $75,000, bringing it to $98,000. And the ROI from the current price will be about 326, which in his opinion is very, very doable. Now let's assume that they allocate 1%, which of course will take time to reach that level. That would add about $2.1 trillion to the market cap and $150,000 to the price, bringing the price of Bitcoin to $173,000 in the future, representing a gain of about 652% from where it is now. Although the crypto strategist's analysis was influenced by comments made by 10T Holdings CEO Dan Tapiro, it is clear that all of these calculations were made by him. The agreement between BlackRock and Coinbase, in the opinion of a well-known macro investor, could push the price of Bitcoin above $250,000. What are your thoughts on this? Will BlackRock be able to complete this vision with Coinbase in order to increase Bitcoin and cryptocurrency adoption? Let us know in the comments below. Moving on, let's talk about another major firm that is still all in on Bitcoin, which is none other than MicroStrategy, which has outperformed 97% of S&P 500 stocks since adopting the BTC strategy in 2020. The value of MicroStrategy stock has outperformed most asset classes since the company adopted its Bitcoin strategy back in August of 2020. The returns have emerged despite the firm's revenues dwindling in 2022 due to the extended crypto market meltdown. Indeed, the stock's performance was shared by senior exchange-traded fund ETF analyst Eric Balkanas in a tweet on August 8th, noting that the company has easily trounced small and large companies, including Bitcoin itself. The MSTR in particular has tallied returns of 158.7% over 728 days. MicroStrategy has recorded returns of 25.2% when compared to the Russell 2000 index. which includes the 2,000 smallest companies, while S&P 500 is falling behind MSTR at 27.4%. It's interesting to note that the stock's returns are 98.3% higher than those of Bitcoin. This may also encourage investors and other businesses to invest in Bitcoin, as it has evolved into more than just a digital currency. It's important to remember that MicroStrategy's choice to support Bitcoin in 2020 was essential in sparking a crypto market rally that lasted until the end of the previous year. Now, that was all the latest news around Bitcoin and major crypto enthusiast firms. Let's finally see what Kevin actually wants to make people understand. A significant opportunity for Bitcoin may start to manifest shortly, according to Shark Tank star Kevin O'Leary. According to O'Leary, in a recent interview with Crypto Jebb, if Bitcoin is given adequate compliance infrastructure at the level of sovereign funds, the floodgates will open for it. His exact words were, "The big opportunity, the mega opportunity for Bitcoin, and why I continue to allocate to Bitcoin, is when we get policy and institutions can allocate to it. Sovereign wealth and pension institutions, they'll probably put 50 basis points, which is half 1%, up to 1% into Bitcoin. And that's where you're going to break out of this range. How high? Nobody knows because the demand is almost insatiable." He also said that most large institutions want a position in crypto and they want the granddaddy crypto. They want Bitcoin. They can't buy it yet. I service the institutions and the sovereign funds with indexing, and they all tell me they want to index for Bitcoin but they can't buy it. They don't have any policy. They don't have any compliance infrastructure. So we gotta get this done. The popular venture capitalist also says that a huge amount of capital could flow into the crypto markets if policies are set in place for Bitcoin and stablecoins. And still, nobody knows when policies are coming into the crypto market, but O'Leary predicts that policies could get enacted for BTC in the next 6 to 12 months. Furthermore, let's ask Kevin whether we have hit the peak of inflation or not.
We haven't yet, particularly if this Build Back Better bill prints another $400 to $600 billion and flushes it right into the economy. That's probably not going to be a good outcome for inflation because it's very inflationary, even though it's trying to be labeled as an anti-inflation bill. Anytime you print money, you get inflation. So we'll see what happens. That's got to go through the gauntlet in Washington. That's one factor.
After hearing what Kevin said about inflation and what is coming next, let's see what comes first. Whether institutions get to the point of buying Bitcoin at their desired price, or they simply don't because of no regulation. I know whenever topics like institutional adoption and crypto forecasting are raised, there will be a variety of opinions. Where do you stand in all this? Please share any thoughts below in the comment section. They always generate interesting dialogue. If you found this video interesting or helpful, click to watch one of these two videos appearing on your screen right now. Each one is a value-packed dive into some of the hottest topics in crypto. Thanks for watching, until next time.